A lot of people think digital IDs are only being rolled out in Europe and the crazy countries like Canada and the UK, but Twitter went wild, embracing this 34-page report written by the U.S. Treasury that on the surface does seem to be embracing Bitcoin privacy, but after spending a few hours reading it, it's clear that not everyone actually read the full report because there's some very dangerous precedent buried in this report that could usher in a digital ID in America, or at very least is engaging and debating whether there should be a digital ID to protect against scams and other criminal activity with Bitcoin. It is a very interesting report. I'm going to give you kind of the more generous take of what I read, and then the more, I guess you could say, cynical, paranoid view of what is actually in this report. Now, of course, I am not alone. I am here today with our boy, Kent Haliburton from Sazmining. So here's the report, guys. If you guys saw this on Twitter, you might have saw some very bullish headlines on this. The report is titled, Report to Congress from the Secretary of the Treasury on Innovative Technologies to Counter Illicit Finance Involving Digital Assets. So let me do a Command F here, and I'll show you guys the kind of very bullish take that everyone clipped out and put on Twitter. This sentence in itself does sound very bullish for Bitcoin privacy in the US. If you just take this alone, it's alone a very interesting quote coming out of the US Treasury. And here's what everyone was reposting on Twitter. This specific quote. And it is, quote, lawful uses of digital assets may leverage mixers to enable financial privacy when transacting through public blockchains. For instance, individuals may use mixers to protect sensitive information on personal wealth, business payments, or charitable donations from appearing on a public blockchain. As consumers increase their use of digital assets for payments, individuals may want to use mixers to maintain more privacy of their consumer spending habits. Of course, also in addition, digital asset services that take custody of user funds and accept and transmit value are currently required to register with FinCEN as money services businesses maintain records and file suspicious activity reports. This includes custodial mixers. Now, that was basically the clip or the snapshot that was going around. And, a lot of our friends, a lot of the Bitcoin media groups were saying, hey, look, this is a win for Bitcoin privacy. Now, I know Bitcoin privacy isn't the most sexy topic when it comes to Bitcoin. To be honest, everyone likes to talk about price. It's love it or hate it. That's what most people like to talk about. Now, again, I'm not going to read the whole page or the whole report. It is 34 pages, guys. So I will give you kind of my overview of it. And then I did get a couple of good tweets to kind of break down a little bit of what this report is saying. Now, my more generous take of this report is you could say that the report, even though it does talk about scams and criminal activity, criminal cyber activity, and it lays out a lot of different use cases and, of course, ways to fight illicit finance, which is the title of this article. It does, if you read it again with a more generous view, it does just lay out all of the obstacles that the U.S. Treasury, or rather the Trump administration, or just the world at large, has to deal with this new asset class that is, of course, Bitcoin, or digital assets, as they like to call it. And it does basically lay out a lot of the attack vectors, a lot of the different things going on where people are able to skirt AML and KYC laws and ways that they are using mixing illegally. But I think in itself, if you read the whole report, it does bring up a lot of different questions of, okay, well, illegal uses and legal uses, which one's which? And further, if we see some kind of dragnet surveillance here, what are the implications? And the article, or rather the report, does talk about there are concerns about this, and therefore they are talking to the private sector, of course, crypto companies, as they like to say, stakeholders of crypto or Bitcoin. So there is a generous view of this, that, hey, maybe this article or this report from the U.S. Treasury is what the title says it is. That this is them trying to game theory ways to fight illicit finance. Again, that's the generous view of this. Now, when I read this, there was some concerning language in it, particularly for me, was the mentions of digital IDs. They specifically mention, and I didn't bring you the exact quotes of this, so you might have to just trust but verify on this with me. But they did specifically mention the UK and Europe and how they're handling illicit finance, particularly with digital IDs and their digital ID kind of, push their operations to unleash a digital ID. And this is where it does get a little worrying. Further, they do talk about essentially using more chain analysis than already is being used by institutions to, of course, monitor the blockchains and make sure that we're all not criminals. Though the assumption is essentially that everyone that is using blockchain is a criminal, and therefore they have to kind of stop everyone, or rather all of the bad information or all the bad use cases of Bitcoin or blockchain activities. Now, there was one thing, and this is me speculating, guys. This is me with my tinfoil hat on. There was specific mentions of AI usage or using AI to monitor and track all the information on the blockchains from the financial institutions. And when I was reading this, my initial thought was this idea of like, okay, so if they're going to use AI to monitor all of this information, a quote, public-private cooperation, it really seemed to me like they're talking about using Palantir to monitor all of this information. Now, again, hey, maybe I'm a tinfoil hat guy. I acknowledge that. But that was the first thing that I kind of popped into my brain when I read this. So again, the precedent, or at least the cynical view of this, the more paranoid view of this report, is they are outlining what potentially could be ways to pretty much tag and bag all the information coming from Bitcoin and digital assets. And therefore, every single one of us is, guilty until proven otherwise. And so that's my generous view of it. My more cynical view of it is some of the implications in this report aren't as bullish as the headline that, hey, there's lawful use cases for Bitcoin privacy or lawful use cases for Bitcoin mixing. I know they said that, but further on in the article, the report, I keep calling it article. The report, they do mention a lot of various uses of illicit finance using mixing. So it's a bit of a grab bag of, there's some positive in it, maybe a less positive than the negative implications. But reading the report, there is some worrying kind of wording, verbiage, sentences in here that it's like, okay, what is actually happening here? Is this simply a report to kind of outline the entire playing field here? Or is this more of a playbook that they're going to use to essentially tag and bag everything coming out of digital assets and digital asset providers and really complicate the process, which is one of the things I've been saying about the Clarity Act. It seems like it might do more harm than good. And again, reading this report, it did kind of give me that idea of like, this doesn't sound as bullish as a lot of the headlines would say. And I'm not the only one that said that. I will bring up a couple of tweets from one of my favorite reporters, of course, Lola Leitz from The Rage. She's been doing a great job, and this was her take. And there is some spicy language in this, guys. I know this is, we try to be a family show, but I slip and stumble at times. So here is Lola Leitz's take on this, of course, from The Rage publication. And she is obviously a lot more cynical and a lot harsher. And here's for the official post from The Rage. And here she does kind of pick some quotes from the article, or sorry, again, the report that are going to make you kind of see where this is going. And so she goes, news outlets are touting a recent report by the U.S. Treasury on the combating of illicit finance and digital currencies as a, quote, win for privacy. This is incorrect. While the report notes that, of course, quote, lawful uses of digital assets may leverage mixers to enable financial privacy when transacting through public blockchains, the majority of language on mixers highlights their use in terrorist financing or other illicit activities, as well as the challenges mixers introduced to law enforcement, which I can confirm after reading the whole report. As the Treasury states, quote, criminals commonly use tools like mixing to introduce challenges for investigators attempting to trace illicit digital assets, frustrating law enforcement investigation, as well as digital asset service providers, transactions, monitoring, and tracing efforts. While the report issues no new recommendations on the future of mixers, it notes that the Treasury has already proposed a rule to regulate mixers under the Patriot Act that has been tasked to finalize by the White House. According to the report, the Treasury has additionally adopted the following recommendations. Treasury will, quote, incentivize the development and integration of digital identity tools aimed at countering illicit finance. Treasury will also, quote, explore working with Congress on ways to better enable third-party services providers to conduct identity verifications. And Treasury will, quote, encourage industry stakeholders to develop open source and standardized APIs for essential compliance functions. Regarding DeFi, the Treasury further commands that Congress should consider specifying actors within the decentralized finance ecosystem that should be subject to AML CFTC obligations. Quote, Congress should consider how to best safeguard the U.S. financial system from money laundering threats that originate abroad, including those in DeFi that should, quote, include adding a sixth special measure to Section 311 Patriot Act, authorizing Treasury to prohibit or impose conditions upon certain transmittals of funds that are not tied to corresponding banking relationships. Congress should consider creating digital asset-specific financial institution types or subtypes within the Bank Secrecy Act, such that the new types of subtypes would be subject to AML CFT obligations. And of course, FinCEN should evaluate whether or how its existing guidance related to the digital asset sector, including guidance issued in 2013 and 2019, should be rescinded, modified, or updated to reflect legislative and regulatory changes. She goes further from her personal account, and this is where she gets a little more spicy, okay? So I'll PG it up a little bit. She goes, oh my God, the Treasury said we can use mixers if we promise we won't do crime. Listen here, you effing idiots. The very notion of, quote, lawful uses of digital assets implicates a mechanism to distinguish between lawful and unlawful uses. As I mentioned earlier, the report very clearly lays out how this will be distinguished, and it isn't a magic and fairy dust. Since no one who claims this report is a win for privacy seems to have actually read it, here's some of the recommendations, and I pretty much read most of them. You know, finalization of the regulation of mixers under the Patriot Act, the creation of subtypes under the Bank Secrecy Act, to resign, modify, or update 2013 and 2019 FinCEN guidance, to incentivize the development and integration of digital identity tools aimed at countering illicit finance. Nothing, and I mean nothing about this is good for privacy at all. So again, the big kind of headline that there is lawful use cases for mixing, it was a good headline. It did kind of perk up all of our ears. But when you read the report, you're kind of thinking, this doesn't sound that good at all. And, you know, shouts out to Lola Elites and the Rage team. I think they're doing very good journalism, like actually real journalism. Okay. We're not just engaging, or I'm not going to say we. The Rage is not just engaging in, you know, full engagement, pleb slop on the timeline. Yes, that quote in and of itself of lawful uses of mixing does sound like there is a narrative shift coming out of the administration. But again, when you read all of the report, it kind of makes a different case. Now, on top of that, another thing that we saw happening yesterday, which is very worrying, it basically is one of these things of don't watch what they say, or don't listen to just what they say, watch what they do as well. And this is where you're starting to see, hey, the one hand is doing one thing, the other hand is kind of doing the opposite. And as we always say, don't just follow what they say. Follow what they do, and then you start to see what's going on. Though there is also the idea that, hey, maybe all the institutions, all of the, ABC agencies aren't necessarily on board with the, quote, federal mandate of becoming the Bitcoin superpower of the world. But this is where it starts to seem like maybe there is a full frontal attack on privacy. Now, what am I talking about? We've been covering this story for a long time now, and it does have to do with the Tornado Cash. So here is a tweet here. Head of marketing, umbrella enthusiast at Arkham. I think this guy's a shitcoiner, but whatever. It is what it is. It's still a good tweet, okay? And he goes, the asymmetry is wild. U.S. Treasury openly admits mixers have a legitimate privacy use case, yet the DOJ wants to retry Roman Storm on 2 counts of money laundering and sanctions violations. Developers can't be responsible for third-party misuse of neutral open-source software. An appalling turn of events, and makes the update from the U.S. Treasury really bitter. Free Roman. And of course, here is kind of the other tweet that was going around yesterday. United States of Department of Treasury. Oh, wait, sorry, wrong one. Here is a post. This was from Amanda Tuminelli. And she goes, the DOJ has decided it will retry Roman Storm in the fall. Despite failing to convince a jury the first time around, and despite making obvious mistakes like calling irrelevant witnesses and not understanding the forensic analysis of their own blockchain evidence. And, let me, I guess I'll have to find the original tweet here. But anyways, you get the picture here. They are going to retry the Roman Storm case, the Tornado Cash case, which we were covering originally because it did set a very scary precedent. And then we saw shortly afterwards, they went after the Samurai Wallet devs. So there is a continuous attack on privacy, even though we saw a, very interesting headline coming out of the U.S. Treasury. At least they kind of embrace, hey, there's some use cases for Bitcoin mixing and Bitcoin privacy. But here's the full tweet. Sorry, guys. It goes, DOJ has decided it will retry Roman Storm in the fall, despite failing to convince a jury the first time around, despite making obvious mistakes like calling irrelevant witnesses and not understanding the forensic analysis of their own blockchain evidence, and despite multiple legal and logical fallacies to their allegations of third-party developer liability. The SDNY will retry Roman Storm on counts 1 and 3 of the indictment. Incredibly disappointing news. Again, I think we all know that the, New York court system is not very favorable, or rather, New York itself is not really favorable for Bitcoin. It's very, with the bit license in New York, it's not the best jurisdiction for Bitcoin at large. They really have a bone to pick with Bitcoin or crypto at large. And here we have a huge stark contrast from the official headlines. DOJ says, the U.S. Treasury says Bitcoin mixing, there's lawful use cases. You read the report and it's kind of like, I don't know, I don't think everyone read the report. I think we just got caught up in a screenshot, and it's like, oh, what a win for privacy. At the very same time, we see SDNY is retrying Roman Storm because, hey, they got what they wanted with the Samurai Wallet devs. They're in jail currently for at least 5 years, or at least, at most 5 years, probably maybe a little less. So it's one of these things where the narrative, the idea of a win for privacy, it sounds really good. I would really have liked to read this report and be like, okay, this was a win. In reality, as we're seeing, they are coming after privacy. And as we like to say, and all of us Bitcoiners, I think, believe this, like, privacy is not a crime. We shouldn't be criminals just because we want to maintain some semblance of financial privacy. It's not that we have something to hide. That's the idea of everyone's like, oh, what? Like, I don't have anything to hide. And it's like, well, don't we all have curtains on our house? Don't we like to keep some things to ourselves? We don't need all of our information blasted on the internet. I know we live in the social media era now where, like, we're all okay with posting everything online. But, my mom's always said something, and maybe this is just some classic traditional, mom isms here. And she's like, hey, you don't have to tell everything to everyone. Keep some things to yourself. So again, you could argue this is a win, but it does seem like we are seeing a true bent or a true attack on privacy at large, which does bring in the further implications of, well, we know there is some kind of fights right now around wording coming out of the certain bills. I believe it was the Housing Act that had a temporary window on a CBDC ban, that there's an argument about it, and you're just like, okay, it really feels like we're just walking into a full panopticon dystopia where everything's tracked and bagged. And that's one of the things us Bitcoiners have been saying forever. It's like, look, Bitcoin is a tool for freedom, but at the same time, if we're not careful, if we're not vigilant, it could be a tool for total control of finances in the world. It's like, it is a double-edged sword. I truly believe Bitcoin is for freedom, but we do have to fight for that. We are the frontline soldiers. This is happening, guys. This isn't just, me trying to get clickbait. This isn't me just being cynical. The wording in this report is very worrying that, oh, wow, like, okay, we're going back to we're all just criminals. And if you want privacy, you're a criminal. So I depending on how you want to look at this, could be a slight win. It could be just a total abomination. But anyways, Kent, I saw you shaking your head. When you're hearing these kind of sound bites coming out of the rage, what's your thoughts? Was this a win? Is the U.S. Treasury embracing Bitcoin privacy? Is this them just kind of game planning illicit finance and how to combat it? Or is it more of a blueprint to unleash total surveillance, AI, chain analysis on everything? Like, what's your takeaway hearing all of this?
Well, I can tell you had a cup of coffee before we started.
Yeah. I had multiple cups of coffee. Okay.
No, my take is, I'll land more with Lolita on this one. And as I'm seeing all this language, I have not read it. I haven't looked at it before jumping on here with you. But as I'm sitting here sort of reflecting on it, it just strikes me as this is rules for thee, but not for me, sort of a situation. Like, you look at all the corruption in the Congress and Senate right now, how much the net worth of all those guys has gone up, guys and gals, once they get elected. And I scratch my head and say, okay, you guys are going to continue to implement the Bank Secrecy Act on us and continue to lock down on us not being able to spend any of our validly earned money, and going to crack the whip on all of us. And at the same time, this oligarchy that we call our Congress and Senate is just going to continue to line their pockets, and nobody's going to look at that. I guess just is the hypocritical nature of all of it is just so absurd. And I think that as Bitcoiners, the best thing that we can do is just opt out. We can be a self-referential system, right? We don't actually have to use dollars if we all just agree to buy and purchase goods and services from one another in Bitcoin. And by doing that, they actually can't come after us in the way that this framing looks to be laying itself out. Like, the idea of lawful users of Bitcoin, like, I'm sorry, there's just users, right?
Yeah.
That's kind of an absurd statement to begin with. So the fact that they're cracking down on it like that is worrisome. The fact that they're coming after Roman again, that Southern District of New York. I mean, I would love somebody to go sort of plunge the drain there. That place seems to just be, the enforcement arm of the Federal Reserve or something. It's pretty crazy. I don't like it at all. So when I look at all of this, I think that, there's some statistic that it takes like 3.5% of a population to resist something for it to actually not be enacted. And I think that 3.5% is the Bitcoin community. And so really it comes down to us. Like, if you look at the generations before us, right, and what they had to do to survive and hand us freedom that we've just been born into, guys, gals, I'm sorry. I think it's our turn. I think it's our turn to fight for freedom for the next generation. And it's coming at us right here and now. And if we're not fighting for that freedom with our actions, and we can peacefully do that with our choice of using Bitcoin, then I think our descendants are going to be pretty damn embarrassed for us that we let it slide away.
Yeah, no, 100%. And I really do like that statistic, that number, 3.5% is one of the things that us Bitcoiners have been saying for a while. The American Revolution was fought by like that 3% number. And I really do want to believe in that number. But one thing that is very worrying, like you mentioned, it does seem like there's like a stark difference right now where like we're all kind of watching, and maybe a lot of us don't want to admit it, but there does seem to be just unprecedented political corruption right now. And there does seem to be a complete severance from what the politicians want to do and what we want to happen. It's like they don't care what we think anymore. They're just kind of like, this is what's going to happen. This is going to get pushed through. Like, don't worry about you peasants. So I'm like, again, maybe I'm hedging my own thinking where I'm like, I totally believe in that 3% number. Like, the intolerant minority will always win. I'm a true believer in that idea. Then you kind of see what's happening from, the top down directory currently as we speak. And you're like, wow, there's a complete severance from the, for the people, by the people. And the politicians are totally just going rogue. And, historically, we've seen these kind of examples. I don't want to be the just classic Bitcoiner of like, late empire vibes here where, the people specifically, man thinks of the Roman Empire. It's like at the end of the Roman Empire, the people in power just, were in for themselves and pillaging as much as they want. Now, I do truly believe that we can hopefully turn this around. Like I gotta believe in the hope. The chat always calls Opti just hopium here. Like, I have to believe in the hope, or else like, what's the point of doing all of this? Like, we gotta believe in the good. But it is hard to fight the black pill and the doomerism when you kind of look at everything and you're just, man, it really is an uphill battle. I guess that's the only. I don't know.
Opti, let me jump in and just say, the way that I've been framing this is, it's the dawn is darkest right before the sun comes up, and it sort of feels like that moment. It sort of feels like Mr. Global, to use Catherine Austin Fitz's terminology for this just Leviathan that seems like we're battling all the time. It seems like we've got Mr. Global like cornered at this point, and basically the mask has been ripped off, and it's kind of like if you have an injured animal cornered, right? Like, it's going to fight till its last breath, and it feels like everything is being accelerated and thrown at us all at once. And if all we can do is just stand our ground, like that phase is going to be over, and we'll have turned the tide. And so I think it's just largely on us to continue to stand our ground, and that Mr. Global is just going to fade away into the sunset and we'll win. It doesn't look like it right now, but that's my take. And you can look at that just by even what's going on in Iran right now, right? Just like the consumption of resources to battle that particular war right now. I think that's one of the reasons why Trump is starting to signal like, hey, we won. It's like, who cares if we won or lost? Like, I don't think we've got the resources to actually put it through. There is practical limits to what we can actually accomplish as a nation right now. And so I think that if the debt-based financial system does not continue to prop that up, it won't continue to exist. And I think we're at the limits of that. So, maybe I'm just like you, an eternal optimist and full of hopium, but I'd like to think that we're just at that last hour, like the 4 a.m. hour where it just sucks while you're freezing your arse off waiting for the sun to come up, but we're getting close. Yeah.
Well, I will, I'll give you the credit here, Kent, because that was a very hopeful, like, okay, hey guys, like, I know it's dark, but we're gonna figure this out, guys. And maybe it's just because you got the wisdom on that beard there that us young guys, and maybe it's just I drink too much caffeine this morning. I don't know. Maybe I'm just like jittery in general this morning. But that did metaphorically walk me off the cliff. I'm like, yeah, actually, what am I saying? We got this. We're gonna figure this out. And it reminds me of the what's the saying? You know, first they ignore you, then they laugh at you, then they fight you, and then you win. As we can see, you know, it's a multi-front war right now, literally and figuratively, but we are in the then they fight you stage, and no one said it was going to be easy. No one said it was going to be quick. Well, depending on which front we're talking about, because people did say, you know, what was going to happen in the Middle East was going to be quick and easy. But in terms of this Bitcoin thing, I've been saying for a while, like, I really am convinced this is going to be, you know, multi-decade struggle, and it's not going to happen overnight. I know some friends are like, nah, one day, you know, gradually, then suddenly they're going to bend the knee. And I'm like, I don't know. I think we're going to be in the trenches for the next decade minimum. And we're just going to try to get more people in and try to make sure, like you said, we stand our ground, because that's really how I think we win as well. It's like we carved out a little area. As more people come, it obviously grows, but we can't budge, you know, from the ground that we've claimed, because that's how we lose. So some wisdom, Ken.
Well, let me just throw in a couple of other historical things that are worth keeping in mind, right? Like, I was actually old enough to remember when the Berlin Wall fell. Now, I wasn't old enough to remember what things were like before that, but you go back in time and what everybody thought, like, it was shocking to see the Berlin Wall fall, right? And that largely was like the difference between like the East and the West. And during that time frame, nobody thought within a week or so that would drop, but it did. Right. And so how radically did everything shift all at once? And in our lifetime, like, I've seen another historical, this was a negative radical shift, but was like 9/11, right? Like that bank, and not the bank secrecy, but the NSA came out and other things. Uh-oh, I'm getting invaded by a little one here. That's my littlest. But
we'll get him off camera. We'll get him off camera.
Yeah, thank you. And then the third one was, you know, like COVID, like another radical shift. So I'm just saying, there's historical events that can come about that can cause massive change very quickly. So things may look hopeless right now, but it doesn't take for a shift to happen for everything to change in an instant. That's all. And the Berlin Wall is probably the most positive one that I can think of in my lifetime.
Yeah, truly. I was a little too young for the. Actually, I wasn't even born yet, but yeah, a little too young for that one. But you know, I like my history. That was someone in the chat's yo, America 7382 is like depressing combo. I know, dude. I know you. I was literally telling Kat before we went live. A lot of you guys are like, hey, I haven't been on the show for a little bit. I need some hopium. I'm like, this might not be the show for you, bro. It's hot. There's not much hopium on today's show. It's like we're kind of, this is more of like a sober, you know, reality shock moment right now. But hey, we got Bitcoin. You know, just keep DCAing. I know at a certain point, I am truly, actually, Ken, we are going a little long, but I do want to get your idea on this. I'm truly, I think, becoming to the point, and maybe a lot of our critics have been saying this for a long time, where like, I don't think it is just enough for us to completely opt out of the system, just like stack sats and chill. I am starting to view this like that is just part of the equation here. Like, you need to opt out, you need to save in Bitcoin, you need to stack sats and chill. But I think there's going to be a lot more work for us to do than just simply saving in Bitcoin. That is like the initial kind of domino, that you need to save in Bitcoin to obviously protect yourself. But I think at a certain point, we are going to have to do more as a community, or, you know, as individuals, however you want to look at it. But I don't know. What's your thoughts on that before we move on? Like, is stacking sats and chilling enough, or is this just the beginning kind of entree battle?
No, I don't think just stacking sats is enough. I think it's one level, right?
Yeah.
I think it's one level, but I don't think you're part of the 3.5% that's resisting if you're just doing that. I think we need to actually be active in building. To me, there's an event horizon between fiat reality and Bitcoin reality. And the more that we build Bitcoin reality, the more that we secure our future. The less that we build the Bitcoin reality, the more that we have an insecure future. It's as simple as that for me. So me building Sazmining, this is part of my effort to resist and to create a different way. And it's my little simple act in the process, right? This is just the only way you generate Bitcoin is through mining, right? So customers that come here, they wind up getting sats that are generated outside of the banking system because they're generated by the network. So it's my little way of having some form of resistance and giving people tools to have their own form of resistance. But I think that all of us have a part to play, whether you're an entrepreneur and just accept Bitcoin and then spend it, amongst your friends, family, and other vendors that you might associate with. I think that we have an obligation here and now to do that level of resistance. I'm not calling for anything violent or anything crazy like that.
None of that.
No, none of that. But I think just like, I was inspired by Mahatma Gandhi and like how he resisted the entire British Empire, right? Like he just checked out, how he actually resisted the British Empire? He refused to buy any of their goods and services. And so what did he do? He made his own clothes. He grew his own food and he just stopped using their system. And I think that we have that opportunity here with Bitcoin to opt out in a very peaceful way. And by opting out, we vote with our dollars not to participate in the system. And that's the way that we actually can change everything is simply by opting out. So I think it's strength in numbers, right? It's not just me or you, Opti, that makes that happen, but it's all of us collectively realizing, this mathematical certainty money that is digitally scarce and protected by electricity is a better way for us to conduct value between each other. And let's just embrace that. We can all kind of have our version of being Amish, so to speak, by building a separate reality and just continue to live as a sovereign entity within the overarching system and do that as a network state, a Bitcoin network state, so to speak.
Yeah, I couldn't agree more. Though I do have to read this comment. This is actually hilarious. Christopher Barber on in the YouTube chat is like, our hopium dealer is telling us to go to rehab. Hey, sometimes we need a reality check, okay? Sometimes we get a little too high on our own supply, okay? All right, that's all I'm doing. No, but that's a funny comment. All right, anyways, guys, we're gonna keep the show moving. I do have an interesting clip that was circulating on Twitter last night in regards to inflation, and then on the same note, I don't know if you guys are watching what's going on in the oil markets, but it's trading like a shitcoin, and I'm really glad I have Kent here, obviously as a Bitcoin miner, to get his take on the rising and falling prices of energy currently and what exactly is going on. And then of course we're gonna get an update from Kent a little later. Might have a little more contrarian takes to wrap up today's show. So that's the layout of today's show. First commercial break, and we'll be right back.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates, instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, guys. All right. The current Bitcoin price is $71,270. Guys, I'm starting to get a little bullish here. I know you guys want the hopium, but I don't know. I'm really leaning into being a wick off maxi right now. Okay, maybe I'll cover that later for you guys on the show if it holds on the pattern. All right. Anyways, the discount from all time high is 43.5%. The market cap, look, guys, we have reclaimed the $1.43 trillion. Dude, a win's a win. As long as we're out of the $1.3 trillion market caps, like it feels a little better. That 1.3 is just depressing to me for some reason. I can't explain it. Anyways, it looks like, let me double check this. It looks like we have, yes, okay. Clark Moody's dashboard is updated on the block height. It is the current block height. It is currently 940,144. I don't know what was going on yesterday, guys, but it was interesting that on the day that we got the 20 million Bitcoin mined, the Clark Moody dashboard just like wasn't working for us. So that I was like, I don't know what's going on here. I got to go to mempool.space to confirm what the block height is currently. But anyways, as I was saying, there was a clip on CNBC, and it is by Ron Barron, of course, of Barron Capital. He's an influential person. Yes, boomer, but hey, influential and billionaire investor. So it's not just Bitcoiners saying these things, which is why I wanted to bring it up, is because he is hitting on not just Bitcoin, but inflation and further what that does to your purchasing power. From a Bitcoiner's perspective, from someone that's been here for a long time, you're probably like, this is nothing new. I've heard this before. But that's the point. Now our narratives are getting out on CNBC from people that are in, higher up positions than we are, that aren't just YouTubers, that aren't just anons on Twitter. It's like the signal is spreading, guys. So hopefully, again, maybe this is the dawn, the darkness before the light. But our analysis of the world is starting to get around, and people are sounding a lot like Bitcoiners from positions that are, very interesting and of course powerful. I'm being reminded right now of that Fight Club meme of like, we run the nodes, we're everywhere. It's like Bitcoiners are everywhere now, and it's I guess to say like we're still early in this game, but we have some, at least some key understanding from some key players that are seemingly coming towards the Bitcoin side. So we'll play the clip and let me know what you guys think in the chat.
What happened is the value of your money falls 4 or 5% a year. That's inflation. Falls 4 or 5% a year, and the economic growth has been about 2% a year. So it's about 7% a year growth, and that means everything doubles in 10 years. The value of your money falls in half every 15 years. So you got to make twice what you're making today in 15 years to stay even. And so stock market, so Bitcoin's been amazing, obviously.
It's absolutely not. And sorry, guys, I thought it was louder. I usually do my best to, edit that so it's louder for you guys. But hey, nonetheless, he's out here saying, the real cost of inflation. Even though, I'll pull up Truflation for you guys. And even though the official, CPI numbers currently are very low inflation, I think most of us in real life here feel what is going on. So Truflation, at least CPI, is saying it's under or around 1%, 1.04%. So if you're looking at the official numbers, you're like, okay, it's, hey, it's 1%. That's not that bad. Even that is not ideal. You're losing 1% of your purchasing power currently every year, at least via these numbers. Now, if you go into kind of on average, it's usually around 2%. As Ron was saying, it's like add that with the SP 500 going up around 5%. So the real inflation is probably around 7%. And then going further, if you elongate this out for 10, 15 years, you literally need to double your income in 15 years just to stay even. This is why it's all a scam. Now, one of the biggest things that really kind of annoys me when it comes to, sorry guys, when it comes to people talking about inflation is they always frame it in this idea of, hey guys, it's only 1% inflation. Like, it's going down, guys. Like, inflation's going down, guys. You should be happy. And you're like, I'm still losing. Like, it's not that it's gone forever. I'm still losing my purchasing power. Yes, it's going down and I'm losing it at a slow, like my purchasing power is getting destroyed at a lower rate, but it's still getting destroyed. And this is how the system works. And most people are like, hey man, inflation, like the gas prices aren't going up that high, groceries not costing too much more money. And you're like, it doesn't matter. We're still losing in this system that is designed for us to lose. And you're just like, I remember the first time I heard this idea that in 15 years, you lose half of your stuff just via normal inflation numbers. And that idea in itself, maybe it's because I was still kind of young at the time when I first got into Bitcoin and I was first listening to Bitcoin podcasters. I was like, yo, in 15 years, I lose half of my money that I save. Like, there's no way I'm going to get out of this. I'm like, I'm going to be broke, sir, forever. Like, I'm going to be a peasant forever. What's going on? And then that's like the moment where it clicks. And I was like, oh, I need to just stack and save and accumulate as much Bitcoin as possible because that's the only escape that I saw. And in hindsight, I should have gone harder. I should have gone way harder. It was the right move, but I could have gone so much harder. And here we are. But anyways, I'm too geeked up on coffee, so I got to pass the mic, Kent. Are you surprised that the Bitcoin narratives are starting to, or rather, posed a different way? Are you surprised that the average person on CNBC is now starting to sound like a Bitcoiner?
No, it's just a matter of time, right? I mean, here's the thing. Like, I think most of us here, through our own curiosity, came to Bitcoin. I think the big print of 2021 for COVID was like a big bat signal that drew a lot of us to Bitcoin. But those that came before, were drawn by their own curiosity. I think that cohort's gone. I think now the adopters of Bitcoin are getting it not through the orange pill, but the orange suppository through pain. And the pain is inflation. And the pain of inflation, I think most people don't actually think this all the way through, right? If, let's say 2% is the number, I know you just showed 1%, but I like 2% better because that's what the Fed did neuro-linguistic programming on all of us for the last 30 plus years, right? But 2% means that 2% of the value of the dollars that you stored have disappeared. Well, how do you make up that 2% the next year? I mean, if you're living paycheck to paycheck, and the answer is you have to work 2% more. So it's not just 2% of your money that disappeared, it's 2% of your time. And actually, when you start to look at that loss of time across all of humanity, it's an absolute travesty because it's literally stealing like our lives away from us, this theft. So to me, this is the most insidious type of theft that there is because it's hidden and discreet. It's like a snake entering your room while you sleep or something. You don't know it's there and you put your foot down off the bed and holy shit, like there goes half my life, right? Or at least half my leg. And it sucks. It's just horrible. I hate it with every fiber of my being because it's just so unjust and not right. And I think as more people wake up to that, I think the tide will turn and that natural disposition will just be, oh, what the fuck? We don't have to, like with Bitcoin, we have a choice, right? You don't have to be a part of that system. And again, opting out and just building in this other system allows that reality to come more into focus. And yeah, I think I saw a chat comment here about Jeff Booth, and I think Jeff Booth has been the first and the best at describing this phenomena. You don't fight the existing system, you just build a better one. And by building the better one, it would just cause the existing system to slowly collapse in on itself. And that's where we are.
Yeah, 100%. I truly love that Jeff Booth comment of, and it really reminds me of another kind of truism. You know, it takes more effort to combat BS. And I think that's kind of where the Jeff Booth, I don't know, heuristic comes from. It's like, it takes a lot more effort to try to stop the collapse of the old system versus it does to just build on a new system. And I know we're still early in that process, but it does, again, maybe we're ending the show a little bit with some hopium here, with some you know, white pills throughout the show. It's like, it is going to take effort, but it is seemingly starting to bud, and there are things that are going in the right direction. And it might just be one of these things where what's the, you know, bad times create strong men. It's like, maybe we just have to rise to the occasion, or else, like, what's the other alternative? It's just, you know, society as we know it is over. I don't know. I can't function on that. Even though you guys know I am kind of an accelerationist. I don't like to be, but I'm like, hey, dude, that's where it's going. I'm like, could we just, like, you know, get to the end of it so that we can move on? But it's going to be a slow process as far as I can see. But we all know the good will always win in the end. So, hey, we'll be okay. Maybe not us. Maybe our grandchildren or great grandchildren. I don't know. One day we can look down from the sky and be like, look, it was all worth it. Oh, that was doomer. All right. Anyways, let's keep it moving.
I keep trying to lift you back up.
I
keep trying.
You got it. I'm feeling good. It might just be the schizo energy of this coffee, and this room is so hot. I'm dying and I'm jittery right now, but we're going to power through. All right, guys. So as I said, because I have Kent on today, I would have probably done this in the culture, because this is more of a cultural event, but it is a news event. And of course, Kent is a Bitcoin miner. And what we're seeing in oil right now, or rather yesterday and today, it's absolutely insane. Oil's literally trading like a shit coin, and no one has any clue, like, what is going on right now. And so I'm going to talk about what happened in the oil markets yesterday. And again, since I have a Bitcoin miner here, it's going to, you know, the conversation is going to involve into what this means for energy, period, around the world. And in particular, what it means for Bitcoin miners. So that's going to be the next segment. I'll be right back.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones? They don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Okay, guys. So before I start pulling up charts for you, if you are following along on, for lack of better terms, the political circus going on currently in the Middle East, one of the kind of talking points, or rather one of the arenas that we're seeing this play out, is in oil prices. And if you've been watching, and I think I mentioned this yesterday, but if you watch over the weekend, we saw oil futures shoot up to about $120 a barrel. And yesterday, the markets were all over the place. We saw literally like almost a once in a lifetime event yesterday in oil prices. If you're unfamiliar with it, prices were, you know, again, around at least people thought it was going to be at like $120 per barrel. We're like, oh my goodness, prices of oil are going out of control. This war, because as I mentioned on Monday, there was, oil refinery field that was catching fire. There was black rain. It was Armageddon looking videos on Twitter. And then around 2-ish p.m., we got an announcement from Trump that was very, for lack of better terms, a little schizo. He's like, on the one hand, stated that we, quote, are very complete in the operation in Iran. And then in literally the same breath, he's like, this is just the beginning. And the markets were like, wait, how do I kind of digest this information? And the price of oil dumped all the way to $84 per barrel. So again, I really like Kobayashi letter on Twitter. They've been doing a great job. So this was around the timing when we got that announcement of Trump that we have on the one hand, fully completed the operation, and on the other hand, it is not yet over and just the beginning. But oil prices seem to dump around that announcement. Later on in the day, in the evening, we got this announcement from Trump that said, basically, once the markets close, we're going to hit Iran 20 times harder. It was like, on the one hand, to kind of persuade the markets like everything's going to be good, oil production's, going to be going as normal. We got another announcement like, we're going even harder on this. And the markets are literally whipsawing right now in oil, which is like, you don't see this happen. Look at this chart here. This is on the daily. So, open at $109 per barrel. It goes as high as around $120 a barrel. Then it goes as low as $81 and closes around $84 per barrel. Currently, it is dumping, and we are $81. I wouldn't say necessarily dumping, but it's under the low from yesterday. It's like, what is going on in the oil markets? It literally seems like it's being traded by shitcoiners. Now, here's the latest update by Kobayashi letter, and he goes, the oil market is moving at an unprecedented pace. Trading volume in the United States Oil Fund ETF jumped to a record 12.4 billion on Monday. This puts volume up plus 1,000% since the start of the year. This also surpasses the previous peak seen during the 2020 oil crash, the 2022 Russia-Ukraine war, and the 2025 spike by over 200%. By 11:30 a.m. Eastern time yesterday, trading volumes were already at an all-time high at 7.6 billion. The surge was driven by a mix of institutional traders and retail investors chasing the oil price move. Oil is now one of the most traded assets on the planet. I saw a lot of Bitcoiners basically saying, hey, this oil price is too volatile. How is this going to be the, store of energy for the world? It's a play on what they all say about Bitcoin. Anyways, another tweet here. Again, I'm really enjoying Kobayashi's kind of analytics, or rather macro framework of what's going on. They do have this article that I highly suggest you guys go read. It's called The Conflict Playbook. It's a good read. It's a good framework. It does seem like it's playing out currently as we speak. And here they go with a chart. It goes, it doesn't get more textbook than this. Every step of our March 3rd conflict playbook has been outlined on this oil price chart. It begins at step 1 and step 2, when Trump sent an armada to Iran and ramped up threats. On February 27th, we saw the Friday night strike from step number 3 of our playbook. This led to a step 4 as risk premiums were rapidly priced in. On March 3rd, President Trump began saying the war could last forever as expected in step 5. Here we are right here. And then on Friday and last night, markets began pricing in step number 6, a prolonged conflict, sending oil prices to $120 a barrel. Finally, today, this was, I believe, yesterday. Yeah, yesterday at 3:20 p.m. Eastern time, President Trump hinted at conditional de-escalation from step 7 of our conflict playbook. We are now nearing step 8. Keep following along. And here, just to kind of give you a little, wet your beak here. Step 8 here is going further. Here we go. The market and political feedback loop, where a prolonged conflict that drives oil prices sharply higher would directly conflict with 3 core policy. And you're starting to see that in step 9, we'll see the deal and narrative framing. And then step 10, which hopefully this happens in Bitcoin, which is why I'm getting a little bullish. I'm becoming a wick off maxi. Step 10 is a violent repricing. So I'm hearing Bitcoin go back up to 100K, hopefully, and the political victory lap. So we're seeing crazy stuff. And again, here's Adam Kobayashi from the Kobayashi Letters tweet. And he goes, there it is. Crude oil prices just rose and fell 30% in the same day in what appears to be a 5 sigma event. In other words, what happened today or yesterday occurs once in a 3.5 million observations. Again, step 7 of the conflict playbook. So crazy stuff happening in oil right now, obviously because of the Middle East. I think we are seeing in general, markets are trying to understand and price what is actually happening in the Middle East, hence why literally all the markets are whipsawing right now. And at the same time, Bitcoin is holding up very resilient, which is, I think, one of the most interesting aspects of all this. But there are people that are saying, the oil price reversing, it didn't really make a new low. People were tweeting this earlier. Now we fully did get a new low. So look, I'm like you guys. I'm trying to fully understand what is coming out of the administration. But as you can see, there is all kinds of volatility in the market. And I really only brought all that oil price, energy conversation to one, compare the price of Bitcoin. We're currently at 71K in the face of the conflict in the Middle East. Bitcoin is very resilient. And then, of course, I have a Bitcoin miner here. Bitcoin literally takes energy and turns it into precious Bitcoin. So, Kent, following along that saga, what is your initial thoughts from a energy perspective, from a Bitcoin mining perspective? Like, what is your macro view here? And then maybe add a little bit of what you think might be happening in Bitcoin mining as well.
Boy, man, that's a tee off. Let me just yell 4 before I get going here. No, the situation politically, I hope that Kobayashi is correct and this is following the playbook and this is going to wind down soon, right? I think it's to nobody's advantage that the conflict in Iran right now with the U.S. and Israel and whoever else was involved, Russia, China. It's in nobody's interest that escalates. Even where I'm located here in South America, I do not want that escalation because it has all the hallmarks of a World War III wind up. And I say that because as opposed to the other military actions that Trump has taken, you know, Iran is a civilization. You know, you go back to the Persians, it's been there for centuries. And that's a different thing to try to eradicate a civilization than it is like a Venezuela that's been there for a few hundred years as a nation state. And so I don't like the odds of us, speaking as a U.S. citizen, trying to stick around and actually entertain transforming a civilization and knocking it over, because that seems absolutely insanely stupid. That said, you know, the oil price is being pushed up. It's going to make it more expensive for anybody that's mining on fossil fuels, right? It is a commodity, and commodities will be repriced across the board. It'll make shipping more expensive. Who knows what second and third order consequences, but anything that's derived from oil will go up in price. Electricity that's generated based on oil and fossil fuel products will go up in price. So that could impact different areas where Bitcoin miners are mining. That said, you know, thankfully, we're kind of with a strategic advantage as a company right now, because we've chosen to mine on 100% carbon-free energy sources. So that shouldn't impact us directly. But electricity itself is a commodity, right? So if the grid power goes up, then the cost of electricity across the board could go up. So energy is one of the raw inputs to the economy, period. So if energy costs go up, that should lead to, you know, inflation of prices from costs increasing, and make it just be another inflationary force. So it sucks. There's no good situation there. You know, I could try to spin it into an angle because we're mining on renewables that it's better, but at the end of the day, the rest of life is going to go up and be more expensive. So sorry to be a Debbie Downer on this one. I think the positive silver lining on this is simply that the Kobayashi playbook is playing out, and we're close to the end, and we're going to wrap it up and run the victory lap, and prices come down. But yeah, when you see the global energy commodity trading like a shitcoin, you know something is really out of whack on the world. I mean, we're talking about things that are like financial tectonic plates that relatively move and like don't move very often. And to see prices like that is kind of like they've collided, and now there's a new mountain range that suddenly appeared, right? Like that's the sort of thing that we just experienced. And I don't think any of us can really understand until like many years in the future just how seismic these events are. But like our reality is shifting, and I think that it's good to have a good moral compass and a good character that's very adaptable right now, because we all need it.
Yeah, 100%. I love that take. And one interest, and actually, guys, I dropped it in the Rumble, the article, the conflict playbook from Kobayashi later. I dropped it in the chat for you guys. So if you guys are interested and want to really get the full breakdown, so maybe it's the framework that's happening. It seems that's why it caught my radar. It's like it seems to be happening. But on the other side, to kind of add on to what you said, Kent, I think since personally, and I'll speak for myself here, when I watch what happened in the oil prices yesterday, it really didn't like set off my radar, because I am a Bitcoiner and I'm like so used to just Bitcoin going crazy or dumping crazy. You know, that's like my baseline. I'm just like, yeah, I'm a Bitcoiner. Like I'm used to the price of this Bitcoin thing, this digital commodity thing, just go absolutely nuts. And like, that's what I like. That's what I'm interested in. That's what gets me excited in the morning, right? But when you think about it from a building block of the modern society, like the prices shouldn't be doing this. And when you hear it's like, oh, a once in a 3.5 million occurrence events, you're just like, oh yeah, like I forget not everything is as volatile and crazy as Bitcoin. Like this thing should not be moving like this. Like no traditional financial instrument, commodity, equity, or anything like that should be ripping like what we've seen gold do last year, silver do towards the end of the year, what we're seeing oil do. And someone in the chat said something funny. It's like, we saw oil go parabolic before Bitcoin. Like, what is going on? Like, what is going on? Like, literally the foundational base element input, as you put it, it's going parabolic before Bitcoin is. It's like we are really, truly in the middle of seeing like a historic monetary reordering, reshifting event happen. And that's why it is very, I think, hard for everyone. And that's why I think literally everyone is sort of confused about what's going on. It's like there is an onslaught of information warfare happening right now to, you know, for whatever benefit on each side. It's like it's really hard to understand what's going on. But when you look at like the charts and the data and the price of Bitcoin alongside of all this, you're just, it's like, whoa, things are getting really crazy right now. And I'm just happy I'm in Bitcoin and we didn't dump lower than 60K and we're at 70K right now. I'm like, okay, hey, maybe there's a silver lining here. Maybe, as I joke, actually, I've said this already on the show. Me and Sophie were chatting about the, you know, the operation in Iran. And we're like, wait, like, I know Bitcoin is anti-war, but is Bitcoin it's like World War III kind of good for Bitcoin because we're not jumping right now. It's like, wait, what is happening? So, hey, look, I've said it before. I don't necessarily want to be happy that our bags are pumping when there is a lot of violence and uncertainty in the world. But, you know, I can feel a little good about it. Okay. Hey, Bitcoin's not dead. We're chugging along. We're doing exactly as we thought it was going to do. And actually, I'm a little surprised at what Bitcoin has done so far, and I just hope it continues to go that way. So, anyways, yeah, exactly right. Anyways,
me too. This is seller's exhaustion, guys. I didn't get to insert that, so I'm sorry to step on in.
No,
here,
go for it. Go for it.
Seller's exhaustion, man, and I just remember it so much from the last cycle where everybody, like, we were down like around like 20K and everybody was like, oh no, we're all gonna die, and yeah, we had one little leg down to like 16K and then we just ripped from there, and it was the same sort of vibe. And so I just kind of wanted to remind everybody that you know, this is what seller's exhaustion feels like, is when the US bombs a nation state and Bitcoin doesn't move. That means there's no sellers left in the room. It doesn't mean we go up from here, but it means that there's not too much further down that we can go before we continue to move on. So anyway, I just wanted to make sure that everybody knew what seller's exhaustion looked like, because I missed it last cycle.
Truly. It's one last comment here, because the chat's funny. Our boy Familia Diaz, he goes, when BTC repricing because Papa needs a farm. You know, when I heard the conflict playbook, and obviously I'm biased, I have the Bitcoin lens on everything, you know, the orange lenses on everything. I'm like, oh man, you know, step 10, violent repricing, like, does that mean we like instantly, you know, go to 100K like next week? And like, okay, hey, I'm okay with this. Like, okay, whatever. We're cool. We'll be back. You know, like bear market over, violent repricing to the upside. Honestly, it sounds kind of fun. Maybe my dopamine will come back. Maybe my life will come back, and all of the black pill doomerism is just out the window, and I'm just extremely bull-tarded on the show. I'm hoping for it. But anyways, let's keep it moving, because I do want to chat with Kent, pick his brain a little bit. I think he's going to have, we chat about it a little bit, prep before the show a little bit. So I think you guys are going to really enjoy this. So last commercial, quick one, and we'll be right back with Kent, CEO and co-founder of Sazmining.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high-performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com.
Wait, Kent, before we go on, our friend in the chat, Dr. Daniel Howell, hey, we could have another God candle, a red one going down. Yeah, you know, when I heard violent repricing, I meant to the upside. It would be very violent to the downside, okay? But I heard positive, so I still have some positivity left in me. Anyways, Kent, before we get into maybe some hopium here. You know, it's, you did tell me some like a bullish kind of, you know, not necessarily an indicator, but a bullish sentiment shift that you're seeing on the back end. And then we'll probably talk about the AI public companies, Bitcoin miner companies going into AI. We covered that last week, but you did just get back from the Heat Punk conference. So anything you want to relay to the audience there before we move into maybe some spicier conversations?
I do. There's a couple of things. So I was at the Space, which is the Citadel in Denver for Bitcoiners. And if you've not been, amazing, amazing location. If you like the vibe of Denver, you'll definitely love the Space. The Heat Punk Summit was there. It's the second annual Heat Punk Summit. And I have to say, it's all of like probably 200 people that were there, but just all of them builders. And it was very cool to be surrounded by a group of people that were just, I mean, the Iran war started, and I literally was the only person to bring it up while I was in the room, to give you an idea. So it was pretty radical just how focused people are on building a different ecosystem here. So love that. Want to give a shout out, and very cool things being built too, like all sorts of different ways to utilize the heat from Bitcoin mining, so that hey, instead of mining, you're heating, and you're just getting a discount in Sats for doing so. So that was pretty rad. The other thing, though, that's been happening in Bitcoin mining for us specifically, which has been somewhat shocking, actually. Like, okay, we're used to, as a company, when the price goes down, our customers generally, demand follows Bitcoin price. Let's put it this way, right? Price is pumping. We have a lot of people wanting to sign up and get started mining. They like the numbers. They want to get started. Price goes down. Fewer people show up. That's been a very normal trend. However, the first quarter of this year has absolutely bucked that trend, because what we're seeing is that's been true for typical, like more onesie, twosie, up to 10 mining rig type of orders. But we're seeing super large enterprise show up at our doorstep and say, no, this is the time to deploy capital. There's blood in the street. I'm buying. And so we've actually had like an amazing quarter here, because enterprise, and I'm starting to think about it as smart money in Bitcoin mining is deploying capital. So if you've been thinking about mining, there's like a truism that has been accurate over and over. Doesn't mean it'll play out this time, but it's been true over and over again, which is you deploy capital when the numbers look the worst, and you reap the rewards afterwards, because as the price goes up, it goes up faster than hash rate. So that's been kind of the interesting insight and tidbit. And then I don't know if you want me to just jump right into the AI
yeah, I do.
Do you want to stop and ask some questions?
Hey, look, I've been ranting. I'm jacked up on caffeine, so I will let you rant. But I do want to add to with your point of this, like, institutional buying or smart money, as TradFi likes to say. We do also have some data to back that up from like on-chain metrics. It does seem like currently, the quote unquote whales are buying again. Now, obviously, we don't have data on who these whales are buying this Bitcoin, but you connect that data, or rather the on-chain charts, with what you're personally experiencing, and you're like, oh, okay, maybe the bottom's in. I know you guys are going to yell at me, but if you're seeing the capital start to get back into the game currently, it does make you feel a little hopeful that, oh, okay, maybe the worst is behind us. Maybe we are building a bottom right now. Not to say it's going to pump overnight, but you build a good floor. Got to have a good floor to jump off from. So there's your little hopium for today. But yeah, can't go into the public codes, because I did talk about this last week. And, before you go in, I'll just do the little context that we reported on this a couple of shows ago, that a lot of the selling we saw was coming from the public Bitcoin mining companies. They sold over 15,000 coins, and they're pivoting into AI infrastructure. And, everyone's wondering, like, who's selling Bitcoin right now? Well, as everyone kind of found out, it was the public Bitcoin miners. And now Kent, coming from the mining space, as we joked, he's like, I might not make any friends from the public Bitcoin miner companies, but this is my take right now. So it is going to be a little AI spicy. But yeah, Kent, floor is yours. Keep ripping.
All right. Well, I have a contrarian take here, and it's basically it came about from watching OpenClaw. So if you've heard of that, it's basically an open source AI agent that you can put on any device and plug in different large language models, whether it's Gemini, Claude, Grok, whatever. I'm sure most of you guys are poking around with these tools at this point, but the interesting thing is this impulse to have a device on desk got me to thinking, and this is an original thought. The original thought is what happens to Bitcoin miners, but it's not an original thought, but it just made me realize that, Web 2.0 is really everybody sucking all of our data from us. And we gave that up in trade for free services, but we lost our privacy. And as a result, I love seeing this effort that people are making right now with the open cloud movement, which let me put some numbers around this, right? So like Linux, like the longest running like open source software that's been on the planet that runs a lot of computer devices, even the backbone of, I think, most like Google devices. That operating system has less stars on GitHub than OpenClaw does, right? And that was like 4 weeks ago. So the adoption is insane, but it shows that there's demand for devices that people can control. They want to control their personal AI assistants. And the knock-on effect for that, in my mind, is something that has played out multiple times throughout history, which is the infrastructure providers of the data centers right now may be the same victims that the people that built the railroads were, the people that built like the fiber optics. If you go back in history, the people that build these big infrastructure situations, which right now it's all about data centers, right? So the people that built the data centers aren't always the ones that get the fruits of that afterwards because of a change in the market. So, the railroad builders, the people that built those, the market changed, and it wound up being that like JP Morgan sucked up most of the railroads for pennies on the dollar. There's a similar thing that happened with the fiber optics boom. Wound up like Google and I can't remember a couple other companies bought up most of the fiber optic assets, and the companies that built all that went bust. I think we're seeing the same thing play out right now with data centers, and I think we're seeing that because there's an impulse. The market, what they really want is not the big cloud-based AI, but they want the personal AI assistant that's sitting on their desk that they can control and manage. Now, whether they understand that they're still giving their data away through the LLMs to the cloud or not, I think is not the important part here. I think the important part is that impulse, and I think that the models themselves are getting small enough that the agents can actually sit on device. So what happens if all the agents are sitting on device and we're getting what we want or what the market desires? Is that inference that's being built right now in data centers is going to be overshot. So getting back to publicly traded mining companies, well, they're making a pivot. And I think the earliest one, like HIVE, would probably be fine because they got there early and they can navigate it. But if you're a late stage Bitcoin miner, publicly traded miner making this pivot right now, you may be just hopping out of the pot and into the fire, or hopping out of the frying pan and into the fire here, because the numbers haven't looked good with Bitcoin mining, even though you've had a lock on all these resources. But so you think the numbers look better over here with the AI HPC data center. But if that whole situation starts to collapse, well, now you've left behind an entire infrastructure set. Do you have the resources to pivot back? Can you? That's going to be kind of an open question for me. Now, could be totally wrong. Better men than me have been wrong, but it just seems to me that AI is not necessarily a bubble, but data centers may be a bubble, and we're in for an infrastructure overshoot, which we've seen many times already.
Interesting. Okay, sorry guys. The hopefully you don't hear that the AC just got turned back on. It's super light, so let me try to angle this. What's your idea on the kind of heuristic that what marks the bottom of a bear market is, the idea like we need a huge sacrifice. And I've heard a lot of people say that what usually marks a bear market, like the bottom of a bear market, is we see a lot of public Bitcoin miners or, bigger Bitcoin mining farms kind of go down and kind of in the past pivot to other things. Now it does seem like maybe that new pivot is into AI. But do you think there's any credence to the idea that there might be potentially some other big Bitcoin miners that are going to get into hot water? Because obviously we saw the hash rate going extremely volatile over the last couple of months. We have been hearing rumors that public Bitcoin miners are, if the price gets any lower and stays there for a while, there could be some trouble. So do you think those rumors have any validity to them, or is it just as Bitcoiners hoping for something? We just want the big catastrophe. We just want the sacrifice so that the bull run can come back on and we can all, enjoy the ride again.
Burn the man, right?
Yeah, we just got our pitchforks. Like, hey, someone go down, please.
Yeah, no, I think that the pivot actually from these Bitcoin pubcos, Bitfarms, for instance, just the CEO came out and straight up said, we're not a Bitcoin company anymore.
Oh, wow. I missed that.
Yeah, just straight up said it in a press release, we are no longer a Bitcoin company, right? So I think that is part of what happened is that if you look at most of the publicly traded Bitcoin miners, they have a whole bunch of costs added on to their balance or just onto their P&L from being public, right? That smaller miners, we don't have. So our cost structure is by definition lower. And so we can get Bitcoin more cheaply. And that is the name of the game as a Bitcoin miner is you can't be the most expensive miner and survive. And I think a lot of the publicly traded miners were not operationally as efficient as some of the smaller guys like us can be. And so I think they were hurting. They saw AI and as a way to pivot to make more money. And so, they're jumping out of the frying pan, but I don't think a lot of them realize that they're probably jumping into the fire because I don't think that the cycle for AI data centers is getting any better. So I think it's just a rough business model, period, to be a publicly traded Bitcoin miner. And it's not me slagging on them. I think if I was the CEO of one of those companies, I may have done the same. But by definition, I think one of the things that I like about this pivot for the Bitcoin ecosystem and for the Bitcoin network is by definition, they have to return dollars to their investors. They have a fiduciary responsibility to do that. So for them, acquiring Bitcoin was always a stepping stone to get more dollars. And that doesn't put them in sync or aligned with the Bitcoin network. So I actually see this as a wonderful opportunity for us as the Bitcoin community to take back more of the network and to move more fiat hashers off so that there's more Bitcoin hashers. And I distinguish those two because when you come to Bitcoin mining, you have to choose what your money is. And most people do that implicitly. But if you choose that fiat is your money, well, then Bitcoin is just a stepping stone and you don't really have long-term alignment with the network. And I think that's been a massive problem that's led to a lot of centralization issues on the network. So getting more of us onto the network hashing is actually good right now when publicly traded mining companies that don't represent that level of alignment are putzing off to go do HPC and AI. Great, wonderful, and I hope that we're a better on ramp for a lot of folks that want to do that, because that's what I've been working on building for the last 5 years is a better on ramp to allow people to mine their Bitcoin.
Yeah, well, Kent's probably not making too many friends right now talking about this. So with that in mind, guys, if you like Kent and you like what he's building and you want to get some wild sats, I think now would be the time to go to Sazmining and potentially, get in on mining. As Kent's saying, it might be an opportunity for the little guy out there. So maybe we haven't seen the final sacrifice yet. But I think with Kent saying all of that, probably gonna, get a couple of angry emails coming soon. So sorry about that, Kent. But hey, that's why we bring you on. You're the mining expert. You keep it real with us every time you come on. So I truly appreciate it.
Well, I didn't come here to make friends. Just tell the truth. And it seems like it's one of those days where it's not a making friends day. But hey, it is what it is. There's a ton of people in the publicly traded mining companies that I have a ton of respect for and really like, and are truly into Bitcoin for Bitcoin's sake. That said, I would be remiss if I did not say that there is a $125 off that you can get for using Opti. It's just for you, Opti.
Let's go. I'm glad it's still out. I'm glad.
Yeah.
Is this just like always running, or do you guys change it, or add it when you come on the show?
I don't know the answer to that. My marketing guy does.
Marketing guy, you keep it live.
Sazmining. Well, he's running the Sazmining handle. He can answer.
Okay, you'll see it in the chat.
But we also have a fun one for Ethiopia, which is going live this week. I'm stoked that's finally happening. But anybody that buys a mining rig there in Ethiopia, we're given 100,000 sats afterwards. So if you want to stack some sats, we're glad to help you get that going.
All right, Kent. Well, thank you so much for coming on. I had a blast. Maybe it's because I had way too much caffeine that you guys saw. I was jacked up today. I was jacked to the gills today, dude. I needed a little extra kick after the gym this morning, and it might have been, Mom, I know I won't drink too much coffee tomorrow. She always yells at me that I'm drinking too much coffee. I'm like, you don't understand. I got to drink the coffee. But Kent, really appreciate you. Guys, go check out Sazmining. Actually, Kent, before we go, give people your Twitter account again. I always mess it up. It's K Haliburton, right?
That's right. Yeah, first letter, last name. That's it. Okay. Well, Kent, always a pleasure having you on. Guys, I hope you guys got something from this show today. Again, we will be live tomorrow. I know you're going to yell at me. We put it at 12:16 on YouTube, and we go live around 12:40. Usually, that's the real time we go live, guys. Okay, I saw you guys complaining about it this morning. If you're a regular, you already know the deal. So I appreciate the guys in the chat. They're like, look, they're going to start at this time. Thank you, guys. I'm always appreciative. I love you guys. Have a good rest of your day. Kent, again, thank you so much for coming on. On that note, guys, it's your boy Opti. This has been Simply Bitcoin Live, and we'll be back tomorrow for another show. Later, guys. Thanks, Opti.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.